So a lot of people think you need some crazy technical analysis skills in order to actually efficiently run your liquidity pools and in order to actually find ranges in liquidity pools. And I'm here to tell you that's completely not true. I'm not that experienced when it comes to technical analysis. I understand market trends. I understand why the market goes up, why the market goes down. I understand market fundamentals. I also understand some basic high-level technical analysis, but I'm not a trader of 10 years. I'm not somebody that has some advanced technical analysis skills whatsoever, and I still make profits, and I still beat impermanent and divergence loss. And ultimately, our Excel, Legacy, and Mastery members all beat impermanent loss and divergence loss and profit as well without having any crazy technical analysis skills. And the reason why is because it's just simply not necessary. So with that being said, I'm going to kind of go over how I choose ranges today. If you guys like these styles of videos, I'm literally at my parents' house right now just chilling in my old bedroom basically recording this, then make sure to drop a like, subscribe, turn on notifications, because this is the type of content that we post on this channel. If at any point in time you need further support with your DeFi portfolio, we have something called our Legacy program, which might be a good fit for you. So that's going to be linked down below in the description. But again, stick around. Let's dive in. So technical analysis, it works, but it doesn't work at the same time. At least it doesn't work for what we're doing in DeFi. And the reason why is because people are trading on USD pairs. They are trading on Ethereum to USD, Bitcoin to USD, Solana to USD. They're not trading on wrapped Bitcoin Ethereum. They're not trading on Ethereum Sol. They're not trading on, say, some of these other assets basically paired with Ethereum, right? Technical analysis only works because it is worldwide adopted, internationally adopted, basically. Technical analysis works because other people use it. For example, if we wanted to say, okay, Ethereum's going to bounce down at 4K, right? Why is Ethereum going to bounce down? Maybe because people are selling at that price, right? People have limit orders that say, hey, I want to sell my Ethereum at 4K. Also, that's the price people want to sell at. That's it, right? So if Ethereum goes up, people buy until Ethereum hits 4K, because ultimately that's what drives the market, people buying, right? And then when it hits 4K, people come in and the sellers are outweighing the buyers. Well, guess what? Ethereum's going to get denied at $4,000. Now, people use technical analysis on Ethereum to USD to determine, hey, like 4K is overvalued, undervalued, right? Or I want to sell at 4K, right? But since multiple people are using technical analysis and multiple people have that mindset of, oh, I'm selling at 4K, which they derive from technical analysis, ultimately that's why the price gets pushed down. That's why technical analysis works. Now, when we start to dive into stuff like, as I mentioned, wrapped Bitcoin, Ethereum, or something along those lines, we are no longer looking at the dollar chart, right? This chart right here is not the dollar value of Ethereum. It's not the dollar value of wrapped Bitcoin either. It is how many Ethereums equal one wrapped Bitcoin, which very few people are trading on this chart. Now, granted, I will say for something like wrapped Bitcoin to Ethereum, more people are trading on this than something like Ethereum to Aether, or Ethereum to Render, or Sol Render, or something along those lines, right? People are not trading technical analysis on those pairs that I just mentioned. On something like wrapped Bitcoin to Ethereum, perhaps they are because Bitcoin dominance, Ethereum dominance, and they're the market leaders. But again, you don't need any crazy technical analysis. So what am I going to do when it comes to finding my range? Well, the first thing I'm going to look at is our range framework. It's something that we created for our DeFi Legacy members, but I'm going to break it down here for you today. The first thing we look at is range time span. The second thing we look at, asset correlation. Then we look at notable fluctuations, the gain-loss trend, and then exposure. So with that being said, range time span, how long do we want to be in range for? Well, let's just say we want to be in range for 14 days. We're not going to use 14 days of data. We're going to use 30 days worth of data, or 28, I should say. And then from there, we're just going to adjust the max price to the 1 month, or not the 1 month, but the 28-day high, and the min price to the 28-day low, right? Of what we just set our calculation range to, or what we're looking back on. And if you're using Dex Screener or another tool like that, it's completely fine. You're just looking at the past 28 days worth of data in the case you want to be in the pool for 14 days. Now, with that being said, like anybody can say, hey, this is about to go out of range, right? It's pretty clear. So what do we have to do? We have to move on. Asset correlation, right? How correlated are these assets? These assets are super correlated, like 93%. We go with the tighter range. You'll notice this is minus 12 plus 3. In all honesty, we can bring that up. We can bring that up to something like 26 or so, which is minus 9. And the reason why is because these assets are correlated. Something that has like a 0.5 correlation, we're going to be looking at plus 15, minus 15 maybe. But with that being said, let's dive a little bit deeper. Notable fluctuations. This is what's happened in the market recently, right? Has the market gone up? Has the market gone down? It's kind of looking at the trend basically. In this instance, the market went down. Now, what does that mean? Because this is not the dollar price. That means that it took less Ethereum to equal one wrapped Bitcoin, which means that Ethereum outperformed wrapped Bitcoin. Again, couple instances where that can happen. Either Ethereum goes up 10%, maybe Bitcoin only goes up 5. In the instance where basically Ethereum goes up more, Ethereum could go up, Bitcoin could stay the same. They could both go down, but maybe Ethereum goes down less, like Ethereum goes down 5%, Bitcoin goes down 10%, or maybe Bitcoin goes down, Ethereum stays the same. So many instances where Ethereum can outperform. Point is, Ethereum is doing better. It's either retaining its value more or it's going up more, basically. But with that being said, right, we're looking over here, Ethereum did better. We capture that trend in our range so far. But what we're not capturing is the reversal. What's right over here? It looks like we're about to go out of range. So what do we have to do? We have to look at the gain loss trend. What is happening in the market right now? Well, there's a big gain right there. So let's drag that max price up a bit. Let's put that at 31. So now we got 26 to 31, just like that. Pretty simple. And then we dive into exposure, right? If we go over here, we currently have 55% Ethereum and 45% wrapped Bitcoin. Which one do we think is going to do better? Do I think wrapped Bitcoin is going to do better, or do I think Ethereum is going to do better? If I think, say, Ethereum is going to do better, well, guess what? I want more Ethereum in the pool. If I think Bitcoin is going to do better, I want more Bitcoin in the pool. And the reason why is this, right? Let's assume a 50-50 asset ratio, which, by the way, if you didn't already know, the asset ratio is determined based on your range. This is roughly 50-50%, let's call it. And assume we have $10,000. Let's go to simulate the performance. If Ethereum goes up to $3,500, well, guess what happens? We now have 10% Ethereum and 90% wrapped Bitcoin in the pool, because keep in mind Ethereum did better, so we got sold out of it basically. That being said, we have $10,238. We have about 1.58% of divergence loss. Now with that being said, if we kept that same price range, which is 19% spread because it's -9 plus 10, add those two together, you get 19 basically. So let's keep that same price range, but let's give a little bit more exposure to Ethereum. So I'm gonna go, let's just say we go to something like +4, and then we go down here to say -15 basically. That's 80% Ethereum. Now this isn't a pool that I would enter into because the trend is pretty clear that wrapped Bitcoin can also do good, not just Ethereum. But in this instance, same exact range size, Ethereum goes to $3,500, we have $10,487. We have a very, very similar amount of divergence loss, right? That doesn't really change. What changes is the actual profits that we have in the pool. We have $200 more by starting with more Ethereum because we're starting with the asset that's doing better and we're selling more of it over time into wrapped Bitcoin. Anyways, back to what I would do in this instance. I would actually bring this price probably over here right at 31. That's going to give you about 55% Ethereum. It's going to allow Ethereum to perform, but it's also going to allow for room for retracement. If we zoom out, look at the past 90 days, you could see there's a key level over here. And I do say key level because this is a key level. People are trading sometimes on the wrapped Bitcoin to Ethereum chart. And just because technical analysis doesn't really work on this, still means we want to look at key levels, right? Because we want to see where it's reactive at. And that right there is the very, very basic technical analysis. If we zoom out to 365 days, let's just say, you can see that's the highest level we've ever gotten because Bitcoin has seen very, very good momentum this market. But if we were to, let's just say, zone in right over here, basically, well, guess what's happening essentially? We're slowly going up, and we're starting to plateau. Ethereum's starting to get its dominance back. Ethereum's starting to reject Bitcoin and say, hey, I want to perform too, and it's wanting to do better than Bitcoin. So that's why I'm expecting a little bit of a turn, and that's why I'm weighting more towards Ethereum over here, 55%, because I'm expecting Ethereum to do better in this instance. So that's how I do it on Ethereum and Bitcoin. So again, that right there, those asset ratios, that dives into the exposure. This is a very, very simple framework. Obviously, there's some details, and unfortunately, we really just don't have time to cover all them because it is a pretty lengthy framework at the same time. There's some formulas and algorithms that we use to determine our ranges. But with that being said, I want to also show you another example. This time we're going to do it with Ethereum to Aether. Now with that being said, I'm actually down on this pair. It's not too bad. I'm still up overall on the strategy about $8,500. I'm still profiting compared to holding the market. Only have divergence losses of $88, right? And if we do the math on that, $88, what's $88 based on my initial deposit of $25,200? 25,200, that is roughly basically 0.3% if we were to do the math on it. So nothing, right? Absolutely nothing, especially when the amount in fees that we have right here, this 23.74 in fees that we have right here, this right here is roughly 9.5%. And last time I checked, 9.5%, a little bit higher than the negative 0.3% basically. But yeah, if offsets, we look at the overall profit loss on this yield, it's like 9.2%. So pretty solid stuff right there. But the next thing that I want to go ahead and dive into is the range on here. As you can see, I have been in range since December 8th. I'm not constantly rebalancing this. I am doing over 10% per month. The proof is in the pudding. This is what I've claimed so far, 23.05, right? Actually what I've claimed, it's not just sitting there. This is what I've consistently earned every single day, on average, about $75 per day. Beating divergence loss on all metrics. Beating if I held all my money in Aether, if I held all my money in ETH, if I held 50-50, and if I held my initial assets. Now, how would I go back and find this range? I'm just gonna go ahead and reset everything over here. Let's just adjust this to a longer horizon so we don't even have it in mind. We're gonna go over here, set our deposit amount to, let's just say $20,000, because if you are trading on the Ethereum network, I would recommend this amount on a position by position basis, obviously, but that's ideally what we would aim for. Next thing that I'm gonna go ahead and do, I'm gonna look at this chart right over here on 30-day period. That's because I wanna be in range for roughly 2 weeks or so. I'm gonna adjust my max price right over here, and I'm gonna put this at, say, 60,000 or so. Not $60,000, 60,008 per Ethereum. And then I'm gonna go ahead and set this min price over here to like, let's just say minus 20% as well. This is a good starting point. Just like that, we're at 100% APR. We're capturing the last 30 days worth of data. It's great, right? If we were to dive a little bit deeper, right? How can we make sure we're maximizing the potential of this yield? Well, number one, if we zoom out to longer horizon, consolidates because it's very, very correlated with Ethereum, 82% right now, and over a course of 60 days, also 83%. So once again, very, very correlated. Well, we would simply want to put this around 60,000. Pretty simple, right? We went up to this level, we got denied, but in the case that we go back up to that level, we want to have room to make sure that we don't get kicked out of range instantly, to make sure that we can rebalance without having a ton of divergence loss. Next thing that I'm gonna do, look at my asset ratio. I've determined 60,000, good top price. Reason why is because that's what we're close to right now. If we were to set this to the 30-day high and the 30-day low, I want you to pay attention to where we're currently at. This pink line, current price, close to the top range. So that's the one I'm adjusting first, right? I'm giving that the room first. From there, I'm saying, okay, I got 50-50 in this pool. But guess what? Want a little bit more ETH because I think it's going to do very, very, very well. So we're going to adjust this bottom price accordingly. We'll put that at like 40,000, right? So 40,000 to 60,000. We got 55% ETH. We got 45% ETH. We're doing about 103% APR, pretty solid. We're in range for the past 30 days or so. If we even zoom out to the last 60 days, we're in range for 99.9% of the time. Every day but this one single little day right over here, we got kicked out of range for like a very, very small period of time. And then from there, ETH decided, hey, nope, we're not gonna take that. We're gonna keep on running. We zoom out over the past 90 days, guess what? Similar situation. If we zoom out over 120 days, once again, and actually this pool hasn't been around for that long. So that's one thing to keep in mind. But this has a $7.8 million TVL, very, very solid asset. Love this thing. Thing's made me a lot of money, so that's probably why I love it. But yeah, I'm very, very happy with the results I got here. And that's how I find range. I don't do any crazy technical analysis. I don't say, okay, but you know, if we put the RSI and then we put the MACD and then we start to draw these little lines on the chart, you don't need to do all that. Yes, it helps. I am not going to deny that it helps. But with that being said, I've helped people that have trading backgrounds, options trading backgrounds, also just stock trading backgrounds, and even forex trading backgrounds. They have technical analysis experience. They've worked in trading firms before, right? They come in here, they start investing into DeFi, and they overthink it with this technical analysis. They think all these things, oh, we're going to trade here, we're going to rebalance here, blah, 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 blah. You know, and ultimately it backfires on them. And I tell them, hey man, I know this is what you do for a living, right? And don't let me tell you what to do when it comes towards forex or anything else. But with that being said, this is kind of my cup of tea. Try simplifying it, right? You're using all these indicators, right? Try just using key levels, right? Try to look at areas where the price is reactive. Simple as that. And guess what? They make more money. Simple as that, right? So keep things simple. Don't overcomplicate it. It's one of the best things that you can do in DeFi. Just simply keep things simple. So yeah, less is more. That's what I just wanted to tell you guys today. I hope you guys enjoyed today's video. If you did, drop a like, subscribe when notifications turned on because we drop value bombs on here, guys. And last thing I want to go ahead and mention just one more time. If you need some support in your DeFi journey, you're looking for a trusted partner like myself, somebody that's been in this industry for 4 years, to guide you, to coach you, to be on there on a weekly basis, diving into your portfolio, let us know. We have a link down below in the description. It's called DeFi Legacy. We've helped over 170 people, and we're continuing to work with more people on a daily basis. So hope you guys enjoyed. Once again, I will see you guys in the next one, and peace out.